Eventually, there's no question about that because all reserve currencies eventually have been replaced. And I don't think that it's going to be any different uh, in this situation. The question is, what does that mean, dethroned? Does that mean that the US dollar is going to disappear somehow and there's not going to be a US dollar? Or does it mean that there will be trading zones, the world will break out into trading zones where US dollar will be dominant reserve currency in some of the trading areas, but not in others? And I think that that's kind of probably more likely. I mean, I don't think uh, the dollar will be dethroned as a reserve currency. It will just become a reserve currency as opposed to the reserve currency. And the implications of that could be huge because the ability of the United States to borrow and finance cheaply its deficits or its spending uh, has been directly tied to its status as the reserve currency. Now we already see developments. I mean, the fact that the United States has imposed these freezes, asset freezes, and frankly, Canadian government imposed that on the truckers. So I mean, the whole idea that money in Western banks can be frozen without due process for political because of political disagreements or political reasons, that's a huge flag for a lot of nations and people that they need to find potentially other alternatives. Uh, the fact that Saudi Arabia is discussing selling oil to China for yuan, that Russia has instituted, pay rubles for gas. All of these are challenges to the U.S. dollar or a replacement. So if demand for U.S. dollar reserve currency on the margin decreases, not disappears, on the margin decreases, that means ultimately that the borrowing costs and the cost of capital in the United States will increase. That's what it means. And ability to spend more than we make will also become more expensive and more difficult. And given what I've been talking to this audience for many years about what I believe are unsustainable financial arrangements that we have now with massive leverage and zero interest rates or near zero interest rates, although they've risen a little bit, it's just the numbers to me don't add up. Because when rates go up, when the cost of funds go up, whether that's because the Fed is doing it, or whether that's because the market is doing it, or whether that's because of the loss of confidence of the people around the world and in the United States, all of that makes it impossible to continue business as usual. And so if the business continues not as usual, but in some other way, that will have tremendous implications. Because the way we got here is by spending more than we make. And so if we start spending as much as we make, and we make less, potentially because of these other issues, then that introduces very dangerous dimensions, because that usually in history has spilled into political disturbances and social unrest. And it's happening, for example, today in Pakistan. I mean, they've had a change of government, and in Sri Lanka. I mean, people don't have the food. Now, I don't think it'll happen in the United States in that quite the same way, but you can imagine that a significant portion of the population is already is already receiving various forms of subsidies, and the government either cannot provide those subsidies or cannot provide as much subsidy. Then people's lives would be impacted in real terms, and that would cause tremendous dissatisfaction and potentially backlash. So I think all of those things come into play here, and we are watching history being made. I want everybody to, at least from my point of view, I think we don't know how this story ends, and you can read a lot of history books and know that usually it doesn't end well. But exactly how it ends, we don't know. And try to focus not on specifics of what's going on in that particular part, but to try to take in the whole and appreciate the enormity of the changes that we are seeing in different parts of the world that combine, I think will combine to produce a very dramatic change in our lifestyle and the system that we have in ways that are very difficult right now to envision, or easy to envision, but difficult to handicap exactly which way it goes. I think what we are watching here is the introduction of gold and commodities back into the financial discussion It's being done by Russia. Uh, in the moment when Russian ruble collapsed in February after Russia started the military operations, Russian government has implemented several interesting developments or several interesting tactics that have stabilized the rubles, and those included backing temporarily ruble with gold de facto by offering to buy gold for a stated amount of rubles. So essentially put the floor underneath the ruble. And then next, demanding payment for a natural commodity in rubles. And that's a problem with having a situation where we, the United States, dictate what currency people have to accept. But if somebody says, well, I have a precious commodity that everybody needs, but I'm only going to sell it for this. So what do you want to do? You don't want to buy it? That's fine. Starve. And I think we're observing this right now in Europe. Furthermore, Russia right now is developing, I mean, they've announced that they're developing an alternative financial and currency system with a neutral, as they call it, reserve currency that will be pegged to a commodity and gold basket. Now, neutral meaning it's not like the United States dollars. It's not a currency of a country. It's just I guess it's sort of like a free market gold standard, if you will, or a commodity gold standard, in the sense that the basket fluctuates in price and everybody else is pegged to that basket. So that would dramatically change the balance from the finance-driven economies to real resource-driven economies, real economy-driven economies. And that's where the reshoring and the reindustrialization of the United States becomes a strategic imperative. So yes, I see the challenge to the US dollar coming from something like what the Russians, not necessarily from the ruble and yuan, but from this arrangement whereby resource trade in that part of the world would be pegged to a tangible basket of commodities and gold. I don't think so. First of all, inflation is a term of art. It's a recession, inflation, these are terms of art. Inflation means CPI. CPI is a coefficient calculated based on a basket of certain goods with certain adjustments. So, can they tame inflation as defined today by the market participants? I don't know. Can they tame higher prices for necessities? I don't think so, because they can't print bread and they can't print wheat and they can't print gold or oil or other critical commodities. And so in this case, whereas the previous crises that we have experienced have been mostly in the financial markets and with nominal prices of securities where the Fed and the Treasury could step in and stabilize by injecting printed money or buying securities through QE or other formats. Well, you can't fix supply chain disruptions through financial means. You can't fix higher prices for critical commodities because the geopolitics is disrupted and there are sanctions and the port of Odessa is being blockaded. I mean, that's not something the Fed can do. So the answer to your question is, I think that there are developments that are now going on, which I alluded to earlier, which are out of control of financial authorities or beyond control of financial authorities and will bring to bear their own implications, which will not be positive. So I think that the prices for essentials are set to increase, and potentially the prices for discretionary luxury items or demand for those things can decrease. And that's what the Fed is trying to do. I mean, by stopping QE and transferring to QT and raising rates, they're trying to dampen the financial bubble, not probably deflate it outright, but dampen it, and to cause some demand destruction. But we have to realize that demand for essentials is inelastic. I mean, you can destroy demand for luxuries and discretionary items, but people have to eat. They have to heat their houses. They need to send their kids to school. They need to buy clothing. I mean, there are certain, and so to the extent that the price of those necessities increases, it's a displacement or something like that effect, where the things you need are getting more and more expensive, and the services you need are getting more and more expensive, and the things you want are either not getting more expensive or getting cheaper, but you can't afford them, or most people can't afford them. Furthermore, demand for discretionary goods has a lot to do with psychology. So to the extent that psychology changes from people feeling good about the future to people not feeling good about the future, then consumption of a lot of stuff that people used to consume in large quantity is going to decrease. And so I see a mixed bag where there will be falling prices for certain things and higher prices for certain other things, but the living standards essentially are set to decline for a lot of people.